Hello, hello, welcome to our session for today. First one after the new year, so happy new year. Hope you guys had a great break over the Christmas New Year period. Nice to recharge a little bit and ready for new opportunities, new markets, new trades in 2023. So hello there to Bando, you said hello, so hello. What I will ask before we start is I would like you guys to tell me, and we'll ask again maybe as more people join, but I would like you to tell me what style of trader you are. Now, you might not know the answer to that. So you might say, oh, I'm just starting, I'm not quite sure. Or you might know, I'm a day trader, I'm a swing trader, I'm an investor, I'm multiple of those things. So let me know what style of trader you are. And then that way I can tailor the examples that we go through more to the kinds of trades that make more sense to your trade plan. So let me know in the chat box, what is your style of trading? And whilst you do that, I'm just going to introduce this and make sure that we cover the legal bits. So disclaimers, top left-hand side. Please read them. You don't need to, if you need to pause the video or whatever to do that. But the point of these are to basically set the right expectations. It's not just a legal tick in a box. We need to understand that when we watch these kind of videos, when we participate in any kind of trading or investing or financial webinar or anything like that, that we, the presenters, are explaining what we do, how we might do it. That's not to say that that's something you should do or that will fit your trade plan. So we're all going to have different ideas of what is tolerable in terms of risk, different times of day that we're free, different markets we prefer to trade, all of that stuff. So take everything and make sure it fits your trade plan before you act on it, essentially. Okay, so you have my email address here, becky@tradictive.com. So if you have questions, by all means, please email me on that. There's also another place you can go for extra resources, which I'll show you that in a sec. Thank you, Bando, for confirming. So swing trader, me too. So that's good. That works out nicely. So we'll look at some swing trading opportunities and we'll kind of get straight into it. So let me first show you, we're on air, yeah. Let me first show you what we're going to look at first, which is the FX Street economic calendar. Now, we want to look at this first because it will give us an idea of perhaps which markets we might want to be a little bit more careful with. Now, as I said, we've all got different trade plans, different risk tolerances, ways of thinking about the world, ways of thinking about the markets. So we're going to look at the objective information and I will give you different subjective interpretations that you can take from that to make it easier for you to make the choice for yourself. If at any point, by the way, throughout the session, if I say anything that doesn't make sense, that you disagree with, you want me to look at a particular market or a particular time frame, whatever it is, just put it in the chat box. I'm here to make this as relevant to you as possible. Alrighty, so we have the weekly economic calendar. We've filtered by high impact news. We want to know which scheduled news reports are likely to have a high impact on the markets that we trade. We're not trying to guess which way we think the market will go. As far as I'm concerned, that is a very, very subjective game. So we need to be a little bit objective here and say what we know from this that's more likely is that there will be more movement, likely be more movement. Which way, we don't know, or for how long, we don't know, but there's likely to be more movement. If there's more movement, more volatility, that increases our risk. It can also indeed increase our reward. So that's why two sides of every coin, we need to interpret it the way that fits our risk tolerance. So this evening, and this is in Eastern Standard Time, so 8:30 this evening in the States or in Eastern Standard Time, we might have some news that affects the Australian dollar. Early in the morning tomorrow, we might have some news that affects the euro, same again on Friday, and then the Canadian dollar as well. So for the next handful of days, Aussie dollar, euro, and Canadian dollar, let's also take the yen before markets open again on Friday. So we've got 4 different currencies that might see extra volatility. So what can we do about that? We have different options. So we can, trying to annotate, I'm not sure it's, oh, no, maybe it is, it's working. So the first thing we can do is ignore all of those markets, right? We don't trade any of them. or any combination. So we don't trade the Aussie dollar or the euro pound because it contains one of those markets. So we could ignore all of them. The other extreme is that we don't care, right? We just carry on. We do what we were going to do anyway, and we don't take this news into account. Somewhere in between is that we could reduce our risk for affected markets, e.g. 1% instead of 2%, or 0.5% instead of 1%. I know I'm writing over the thing there, but hopefully you can still see that. Or we could not double up, meaning one trade that has the euro in it, no more than that. Ideally, we don't want to double up too much normally anyway, but especially on markets that might have higher volatility. So hopefully that makes sense. I'm going to still look at these markets, but I wanted to bring your attention to it so that we can, you guys can know if this is really something that you want to do or not. Okay, so Bando has told us that they are a swing trader. So Mono, if you're comfortable, please let us know in the chat box. Are you a day trader, swing trader, position trader, investor, or all of them, depending on what you do, or completely new, not sure? Let us know, and then we'll tailor things a little bit more to you. Without further ado, let's crack on and have a look at some markets. So we'll start with majors, but again, if you have specific markets you want me to look at, let me know. Swing trading timeframes. The lowest I would go on the left-hand side would be a daily, personally. I know you might disagree with me there, but I would use a daily for my lowest time frame on swing trading opportunities, and I'd go to a weekly. So either a week or a day on my left-hand side. The right-hand side, therefore, will be based on our kind of set timeframes, but it's actually a bit more flexible on the right-hand side. We will either have a 55-minute time frame or a 1 hour if you can't get the Fibonacci numbers as a time frame. So 55 minutes or an hour, or if we're looking at a weekly, then we might look at either a 240, so a 4-hour chart, or we would be looking at a 144. That's the Fibonacci one that we would look at. It's complicated to get into why we might look at Fibonacci numbers. It's just based on data and based on back testing, but it doesn't make too much of a difference. So either way is fine. Okay, so let's start then with the daily chart on the left-hand side and the 55 on the right, and we'll look for some opportunities, see what we get. Okay, so first of all, we're not going to carry on any further with the, try and move this so we can see it well. There we go. We're not going to move on any further with the euro dollar on a daily chart anyway, and I'll tell you why. Is that we have these stats here. Let me annotate again, perhaps circle them or something. So we have these stats here, and these stats tell us how often that market usually goes up by. So here, what it usually goes up by, and that's 5.06 candles. Now we're always going to round that up because there's no such thing really as 0.06 of a candle. So usually 6 candles. This number here tells us how long that market usually goes down for. So that's 5 candles in this case. Since we've got an upwards climate, this thick blue dot, that tells us probability is upwards. So the probability is upwards. This market usually goes up for 6 candles, but we're already on candle number 8 to the upside. So we're already overextended. We have gone further up than we usually would. Now, does that mean it's not going to continue up? Of course not. It could still continue up, but we have less probability that it does that. Everything that we do is about probability. We want to make sure always that we are doing what makes the most sense from a probability standpoint. So we're going to move on. Let's look at the Aussie. Again, if you would like to look at different timeframes, you let me know. Different markets as well, let me know. Alrighty. So similar situation, it's not surprising. We're looking at majors, similar situation here. Usually goes up for 6, currently on 8. So moving on. New Zealand. Let's see, we're probably in the same situation here. Go look at the pound. Same situation. we start to look at it from the other side, we might have a different situation. Brilliant. So let's see here. Oh, this looks like a trade we put on last time. Nicely done. Looks like we would be in profit on this market, depending on whether or not we cancelled it at these points where the market climate changed, but great. I'm going to delete my drawings there, but this was a trade we would have put on before with the entry price being this lower band here. First target would be the green line there. Second target is the green line down here. If you were in that trade, you're still in it probably. Okay, so looking at the dollar yen, we have a thick red dot. That tells us probability is downwards. The market would usually go down for 5 candles, and we're currently on the 4th. So we're still within a normal range for that price to continue to go down. Now, depending on how strict you want to be, you could say, as soon as this number goes to 5, so tomorrow, if it continues to go down, then I would cancel my trade. You could give yourself a little bit more room. You could say you don't care at all, right? And just take it as long as it's down. It doesn't matter about these stats. For me, I'm going to place this trade if we find one that works because we are still within the parameters. Okay, so thick red dot, probability down, which means we're looking to sell. So I'm going to load the same market on the right-hand side, and we're going to look for an opportunity which we do have. Brilliant. So we are now combining the second and third elements of our methodology. So the first element is the market climate, the auto climate. This app here that tells us where probabilities lie, up, down, or nowhere. In this case, down. Second element will be our UFOs. These UFOs show us where buyers and sellers are, essentially. So we've got sellers between these two red lines, and then also between these two red lines, and so on. So we have sellers between 128.841 to 129.90. That's the closest UFO. Now, we've got different UFOs. So we also want to qualify that UFO with the third element. That third element is our EMA number. It's our 9 EMA. Again, you could play with that, right? You could make it different lengths. EMA, we use the 9. The 9 EMA, or any EMA, is going to be a price where buyers and sellers come in. People typically, if price is below the EMA and comes up and hits it, they will sell. If price were above the EMA and comes down and hits it, people buy. So what we're saying is probability is down. We have a bunch of sellers at the same price that we might also have other sellers. So we're combining probabilities in our favor. Does that mean it's 100%? No, unfortunately not. Nothing ever is. But it gives us more probabilities in our favor than if we were to drop one of these elements. So we are going to take this UFO here. I'm going to spread this out a little bit. And we are going to use the numbers that we have on the right-hand side to help us figure out what will be our entry and stop. So the number at the bottom is 128.841. We're just going to round that down to 128.84. Easy done. The top number, which is where the sellers stop before they start again, up at 130.53. But the top number for this first stack of sellers is 129.98, actually. So we're going to round that up, firstly. It's a buy order, so we always round it up. Round it up, and then we're going to add a couple of pips for the spread, and then we're going to add 5 pips for wiggle room. And there we go. That's our entry and our stop. Now our targets, again, we're very structured in what we're doing. So our first target will always be 1 to 108. So if the entry is 128.84, then the stop loss is 129.98, then that's 114 pips worth of risk. So I want 114 pips worth of reward. Very easily done. So we do that. And again, you guys might have different plans with this, and that's okay. Some people want to go all in with one far target, and that's fine. All that means is that you're more likely to get stopped out, but when you're right, you'll make more. If you have staggered targets, then you're going to take little chunks as you go. Overall, if it moves 5 to 1 away, you won't have made 5 to 1. You might have made 1-to-1 with one of them, and then 2-to-1 with the other, and then 5-to-1. So somewhere along there, maybe you made 2 point something to 1, because it averages out. Neither is right or wrong. It depends on your risk tolerance. For us and what we do, we place a 1-to-1 as our safety target. So we're going to do that. We're going to risk $50. That's just an example. You guys risk whatever you want to risk. I'm definitely not in the business of telling you how much money to put onto trades or at all. So we've got our first target. Where is our second target? Again, very mechanical. We have a green UFO on the left-hand side on the bigger time frame. That tells us that's where buyers are. So if we're selling, and for us to be profitable, price has to move down, then the only way we're going to be stopped is if there are buyers that push price up, right? We want price to go down, buyers push price back up. So we want to get out before the buyers. Now, that's not to say that buyers won't come in for other reasons, but we can see them quite clearly now. So we're going to use that as our reference. So if that top number is 126.32, we're going to add a couple of pips for the spread. And there we go. That's our second target. So we put it in. Same entry price. Same stop loss price, which is remembered there. Same risk, which in this case $50 either side. So overall $100 of risk per trade. Of course, you could make that 10. You could make that 1,000, 1,000,000, 2, whatever you want it to be. And our profit target, we're just going to type in here 126.3. Time in force always good till, or GTD. Brilliant. Okay, now I'm going to put a little note on. I would recommend you guys do this with your trades, especially if you're using platforms like TradingView, because they're very visual. I love using TradingView for this reason. You can obviously connect it to many different brokers, but for me as a usable platform, I think it is one of the better ones. So you can type on, just to remind you of what happened. So placed on 18th of January, 2023, we did a 1 day on the left and a 55-minute on the right, and it's a short. That's it. Now, I would then suggest you take a snapshot of this trade, save that somewhere. Also put it in a log, some form of Excel spreadsheet or Google Sheets or something like that, where you're keeping a log of what you're doing. That will help you over time see what's working for you and what's not, because you're going to track those variables. So things like the time frame might be a variable, or it might be the time of day that you put the trade on, or it might be the market itself. Either way, if you track those things over time, you're going to have the data that helps you figure out what works best for you and what doesn't. Okay, so that's the first trade of the day. We're going to keep going, keep looking for different trades. I'm now going to look at some cross pairs, because we've looked at majors now already. If anyone trades a specific market on specific timeframes that you'd like me to look at, just put it in the chat box and I'm happy to look. Also true of cryptocurrencies. I'm happy to look at cryptos as well if you want me to look at those. So just let me know the market or the symbol for the market that you want me to look at and the timeframes, and I will navigate to that. Otherwise, as Bando has told us that they're a swing trader, we're going to still look at swing trading timeframes, and we're just going to go through random currency pairs until we find an example. So you guys let me know in the meantime if there's anything else you would like to look at. Okay, let's look at the pound Canadian. Okay, lots of movement there, which straight away I'm going to veto this. And again, I'll tell you why. This market, you can see by the auto climate. Let me try and make this bigger so I can really make the point. Okay, that's as wide as we can get it. Okay, so we have a thick blue dot, brilliant. That tells us probability is upwards, but we've got a really big line here. And we've got a number. That number tells us that price is 1.55, whatever, 1.5 in terms of the usual ATR, the usual range. It's 1.5 of that away from the ideal trading price, which is the EMA. In layman's terms, it's too far away from our ideal trading price, meaning if price were to retrace and come back to our ideal trading price, we've got more things that could go wrong because it's too far away. Brilliant. I've just seen there. So from SB, NASDAQ, Could you clarify for me? And I'm happy to look at this. I know we're in a Forex session, but I'm happy to look at the futures version of the NASDAQ. I'm happy to look at the Qs. I'm happy to look at whatever version that you want to look at from a CFD perspective. So if you can specifically type in the symbol that you want me to look at, I will look at that. So whilst you do that, SB, I will continue and look for a different trade. Let's look at Aussie Swiss. Okay, so this one straight away, thick blue dot, probability up, but usually goes up for 5 candles, and we're on candle number 17, so way further than what would be usual. Now we do have buyers underneath us that could be pushing price up, and that's probably what has kept price being pushed up, but it's way too far. We are, again, lacking the probabilities that we need if we get involved in this trade. So we will move on from that. Let's do Aussie New Zealand. Again, SB, let me know specifically what symbol you want me to look at with the NASDAQ. We could look at it from an ETF perspective, CFD, futures. So whatever symbol you're using, let me know and we'll go and look at that. Okay, so same situation here, way overbought. Let's look at Canadian New Zealand dollar. Oh, it's New Zealand Canadian, isn't it? Wrong way around. Okay, so we've got a similar situation here that we saw before. Yes, we've got a thick blue dot, probability is up, but price is too far away. So let's look at New Zealand yen. Here, we're going to ignore this one as well. And I know for most of us, we want to just see trades being put on. And we want to just be able to copy them, right? Or at least hopefully just learn from them so that we can figure out what we need to do. And watching somebody go, nope, we're not trading that. Nope, we're not trading that. Nope, we're not trading that, might not be what we want to see or what we want to hear. However, learning how to eliminate trades is arguably more important than learning how to place them. Because most opportunities you look at, you shouldn't be placing trades on because it doesn't line up. It doesn't have the probabilities that it needs. And if something's not right and you don't realize that and you place the trade, then you're obviously putting yourself at a greater risk. So we've got, yes, 4 thick red dots. Last one is a thick red dot. Usually goes down for, well, 7. I have to round that up. 7 candles. We're currently on 4. So what's the problem? Price has already crossed the EMA. And if we're going short and price has already crossed the EMA to the upside, that tells us that there is likely a push to the upside happening right now. We don't want to be selling if there's a push to the upside happening. It's the opposite of what we want it to do. So we will keep out of this one. Yeah, any questions, you guys let me know. If you're thinking, sorry, what, why is that a problem? Or what was that? What does that mean? Why this, why that? What about this? What about that? Ask me and I'm happy to oblige. So SB, I haven't heard from you on NASDAQ. So I'm going to look at it from the Qs, on the Qs, but it would be the same pretty much in anything else. But of course, you can look at this from a CFD perspective, from the individual components of it, right? Individual stocks. You can look at it, I think I said there's futures. You can look at it in terms of ETFs. So all kinds of different ways that you could look at the NASDAQ. They're all going to pretty much move in a very similar way. So even if this isn't the exact market that you're looking at, hopefully it's still something that helps. What I'm going to do, because the stock market actually isn't open yet, let's have a look at the futures market. Okay. Brilliant. So straight away, if you're looking at a daily chart on the NASDAQ, I would be steering clear based on our rules. Again, you might not care for these rules, but we've got a thick blue dot, probability upwards, but we've got sellers just there on top of us. Price is at 11,704 and the sellers start at 11,729. Very, very close, which means even if we did buy, everything else lined up and we bought, we'd have such a small amount of room to take profits before selling pressure comes in. So we don't want to do that. We want to make sure that we have the room for our trades to run if we're right? For them to get to a place that shows us objectively where we start to lose probability. And in this case, that's very, very close. So we would ignore that. Now, let's say we're looking at a weekly chart. Let's have a look at this. Weekly chart, very different situation. And in a weekly chart, it doesn't really matter what the daily's doing because you're going to hold on to it for longer anyway. So even if it drops for a couple of days, based on what's happening on the daily chart, if long term it's still going up, that's what you care about if you're looking at a weekly, if you're a longer term swing trader. So on the weekly chart, you've got a thick blue dot, probability upwards. You've got a long way until it gets to sellers at the top here. So you've got probability on your side. Now, if we've got a 1 week on the left, then we want a 144 on the right. And what we're looking for, which it doesn't seem that we don't have, unfortunately, what we'd be looking for are green UFOs that coincide with the EMA number. So the EMA number is 11462. Let me just move this to where that is. So we'd want a green UFO around that price, and we don't. Now we could have a look at different time frames within a range here, right? So if we've got a week on the left, we could look at a 4-hour chart, even look at a daily chart if you wanted, even a 2-day. And you see every chart that we've looked at, we do not have a green UFO coinciding with that EMA number, so we don't trade it. And again, that's us being strict on our rules, right? Those are our rules, so of course we're strict on them. Don't have rules if you're not going to use them. But we're doing this because we want to make sure we've got different layers of probability all on top of each other. So if they're not there, we don't trade, which means you eliminate more trades than you take. But in my opinion, that's better because then the trades you do take have higher probability of working out for you. So apologies there that we couldn't find anything on the NASDAQ, but let's move back to some Forex pairs. So let's look at, let's do Canadian yen. And again, I'm going through pairs. You guys let me know if you have specific markets, specific pairs that you look at, or timeframes you want to look at. So let's go back to our daily. Brilliant. So daily on the left, we have a thick red dot, probability down. Market usually goes down for 5 candles. We're on the 4th, so we still have a little bit of room. So we're going to look for some selling opportunities. I'm going to use the 55-minute on my right. See if we have something that lines up. If not, we'll have a look at the hourly. And we do have something that lines up, so we're going to place this trade. So let's just explain why. Thick red dot, probability down. UFO, multiple UFOs, sell UFOs on top of us here, showing us that we have selling pressure above us and specific pockets where we have large chunks of sellers. In this closest UFO, we also have the EMA price, which is where we're likely to see more sellers come in if price were to reach it. So you see, once I draw the lines around, it's very easy and visual to see here. That EMA line is comfortably within what would be our entry and stop. And we've got room to take it to its closest buyer. So all of our elements are checked. All of our check boxes are checked. So we're going to take the bottom number, 96.366. We're going to round that down, 96.36. Then we're going to take the top number, 97.09. Going to add a couple of pips for the spread. And then we're going to add 5 pips for wiggle room. And that is our entry and our stop. First target, 1 to 1 away. So I'm just going to draw that there roughly. We'll figure it out mathematically now. So 96.36. Stop loss is 97.16. Our risk, again, I'm just going to put 50 bucks, nice round number, easy to use as an example. Again, you guys put in whatever makes more sense for you. So that now tells us, done the maths for us, that that's very close with where I drew my line. Our first target is 95.56. Brilliant. Second target is going to be here, closest set of buyers on our bigger time frame. They start at 94.069. So we're going to round that up and add a couple of pips for the spread. And that's going to be our second target, our final target. So same entry, same stop loss, same risk, different target, which is 94.09. Brilliant. Okay, so that's the second trade of the day put in, and we have different markets that we're looking at. The first one, I think it was the dollar yen actually, so we've placed the yen twice, but we are using a major and then we're using a cross pair. Going to now try and steer clear of the yen if we can. So let's look at the Euro Aussie. Again, happy to be guided by you guys on what markets you want to look at. So thick red dot, but way past what's normal. Usually goes down for 5 candles. We're on candle 15, so 3 times further than what's normal. So not great for probability's sake. Look at Euro New Zealand. Oh, looks like we had a trade on there from way back, so let's delete that. Okay, so thick red dot, probability down, a bit far away from the EMA. You can see here if it's over 1, I'd rather keep away from it. It just tells us it's too far. By the time price gets back to it, more can change. So we'll move on from that. So let's look at pound New Zealand. We haven't already. Might be easily forgetting here which ones we look at. This one, thin dot. We haven't seen that yet today, so I'm just going to highlight this. We've got thick blue dots, probability up. Thick red dots, probability down. Thin dots of either color, doesn't matter. Thin dots tell us not enough probability in either direction. So don't care for it, right? Don't want to place a trade if I don't have probabilities. Now, by the way, I should have said this at the start and I will show you guys now. So tradewithufos.com/Becky. This is a link that will take you to my page, but from here, you've got a question and answer section. You've got some now historic, but trade notes from previous sessions, the sessions that we do with our members, that you can come and read the notes, see what happened to the trades, how we manage them. You can learn from that here in stocks, Forex, and crypto for me. You've got different apps that you can look at. Again, Alter Climate you'll see is free on most platforms. You get a one-time fee, but other than that, it's free. Alter UFOs depends on the platform you use. Got options planner, predictive options planner, which is our platform. But at the bottom, question and answer section. So if you have questions, it might be that the question you have somebody else has already asked, so the answer's already here, or you can post your own. So you can use this link to help you with many things, and you can explore other things whilst you're there if you want. But you can use it specifically, I think, for the question and answer section to help. Okay, so let's carry on looking for more trades. Let's do Aussie Canadian. Not sure if we've done that yet. Too far away. Let's do pound Aussie. Not sure if we've done the pound Aussie yet. This has gone way too far along its movement here. What we're going to do now, let's just change time frame so that we can look at it from a bigger perspective. Still swing trading, I would call this longer term swing trading. Pound Aussie on both sides. Make sure that you're using obviously the same. I always use Oanda just because it's one of the brokers I have, but pick whichever broker you're using. So on the pound Aussie on a slightly bigger time frame, we have thick red dot, probability down. However, we have buyers just beneath us. So what this shows us is that we've got a fight going on. Sellers pushing down, buyers pushing up. Who will win? Couldn't tell you, which is why we leave it alone. We want to make sure that we've got probability on our side. Okay, so again, you guys let me know in the chat box, and I'm happy to come back to whatever you tell me to, but I'm going to look at some cryptos. Only because I know a lot of people that trade Forex also dabble in cryptos. If you would rather I stick to Forex pairs or a specific market, you tell me in the chat box. But otherwise, we're going to have a look at some cryptocurrencies and see how we get on. Same rules apply pretty much. Also, if you trade stocks, same rules apply. If you trade futures, same rules apply. We still want these levels of probability on our side. So we have a thick blue dot here, probability up for the first time in a long time, actually. Last time we had probability up was last March. And before that was the November previous. So for the first time in a long time, we've got probability up in Bitcoin. Now, it is too far away from our ideal trading price. So looking promising, potentially for some movement to the upside, but we will keep an eye on that one. In terms of placing a trade right now, slightly too far. Let's look at Ethereum. Again, slightly too far, also coming up to some sellers, but similar thing. Obviously, the markets often move like each other. Cryptos often similar to each other. Same thing here with Ethereum. Last time we had probability up was around March, April time. And before that was around November, December time. A similar movement, but nothing to be done here today. Let's look at Doge just for fun. And it just shows us that we've got the same methodology that can be used in basically anything. Even if it's something like, for me, Dogecoin, I think things that are based off of memes or become memes might be something I choose to stay away from anyway, but the same objective approach applies. So here we have a thick blue dot, probability is upwards on a weekly chart. Now we do have sellers very close by that are likely to start pushing price down. So it's kind of too close to the sellers. But let's look at a daily chart. Okay, so one thing to point out on cryptos, if you're using AutoClimate, you might have this question. We've got these same stats, but you'll see NA, not available information. Why? Because cryptos haven't been around very long. So there's not enough data yet to say what usually happens or not, because they've only been around a year, 2 years, 5 years, rather than the euro dollar that's been around decades. Whenever the euro started, right? Or the pound dollar that's been around, again, decades. So we don't have that data yet. So we can only rely on the remaining elements of our probability lists here. So thick blue dot, probability up, close enough to the EMA, and we've got room to take it to the sellers. So on a 55-minute chart, we want to be looking for a UFO that coincides with our EMA. And we just about have one, just about. Brilliant. So we can see here, I spread this out, and see here that that EMA is kind of nicely within there. So the top number is 0.8366. Oh, sorry, 0.08366. So we're going to round that up to 37 and then add a couple of pips. Our stop loss, we're going to take 0.08262. We're going to round that down and we're going to take off 20%. That would be our rule with cryptos. That's one of the things that differs between cryptos and Forex. Much more volatile market. We need to give it a much bigger wiggle room. So we're going to bring up a calculator and do some quick maths together and then place this trade, and that will be the last trade of our session. So 0.0839 minus 0.0826. That is 13 pips. So 20% of that would be another 2.6 pips. Round that up to 3 pips. So we want to add 3 pips here of wiggle room. So that means we take this down to 0.0823. Happy to go through that again if I lost anybody there with the maths. I know I often get lost in maths and calculations. The great thing about using TradingView, I think, is that it does a lot of the maths for you. But essentially, this is where we would be looking to buy. Now, we're going to put this trade on. So far we've had 2 short trades and now we are putting on a long trade. We've looked at different time frames, but eventually we've ended up taking them all on a daily on the left and a 55 on the right. $50 risk or whatever you want, right? Whatever you want it to be. Our first target is always a 1-to-1 away, because that way, if price goes in our favor a little bit and then against us, worst that happens is that we break even. It's not the end of the world. if we have our target, say in this case, we'll see in a second how far away that is. If I have my target that far away and price goes, nope, then I lost money, even though I was right. It's how right are you going to be, right? That's the question. So having a one-to-one target is what helps us to protect against being right, but only a little bit right. So we'll put this first half of the trade in, and then we'll put the second half of the trade in, 0.0839 to 0.0823, same risk. And in this case, our profit target is 0.0956. So that's a 7.31 to 1. Right? So it would be great if we were hitting 7 to 1s all the time, right? For every dollar you risk, you make 7 on a trade. Brilliant. But what's the likelihood that that happens? Low. For every point in the favor of reward to risk, we lose points on probability. So we want to balance those things, right? So you might balance that by where you put your targets. As we do it, we balance it by having 2 targets. You might balance that by greater wiggle rooms. There's loads of different ways to balance that. Trailing stops, that's one way of locking in profits if you're right a little bit. All with pros and cons, like anything. So I would always recommend back testing that. For us, what we do is we have our one-to-one target, so that if price comes in, hits our entry, moves off a little bit, and then comes against us, we make half the trade, then we lose half the trade, so break even. But if we're right, price hits our entry and it goes off, we lock in some profit there, keeps going off, hits our second target, then we would have made 1-to-1 on one half of the trade and then 7-to-1 on the other half of the trade. Overall, it would be a 3 and a bit to 1, 3.5 to 1-ish. And that's what we make overall. Okay. So 3 different trades, 3 different markets. Got a major, a minor, and a cryptocurrency. Same process. If you notice, just because we looked at a different market, or in this case, a completely different asset class, we still look at our auto climate, we still use our UFOs, we still use our EMA, we still have risk management, we still do our targets in the exact same way, which is applying it to a different asset class. That might come with different risk parameters, or of course, different times of day that they're open and things like that. So be aware of whatever market that you trade. But if you are knowledgeable in the market that you're trading, the application of the strategy should be basically the same. So if you guys have any questions, please feel free to reach out to me. Becky@tradictive.com is my email address. So please feel free to email me on that, or go to tradewithufos.com/Becky. And then you can use the question and answer section at the bottom to learn from others' questions or to ask your own. And I will answer your question on there as well. Other than that, thank you for joining me today. Let me know if you need anything. I'll see you next time, and happy trading. Take care.